Welcome to Explain the Charts. Today, August 10th, 2025, we are taking an in-depth look at the GBPUSD currency pair, dissecting both recent news and its corresponding chart data. Recent market sentiment for GBPUSD has been quite dynamic, largely influenced by central bank actions and the US dollar's performance. News sources like FX Street and Investing.com indicate that the British pound is gaining strength, notably benefiting from a hawkish stance by the Bank of England. Concurrently, the US dollar has been losing some traction, heading for a weekly loss, which further contributes to the bullish outlook for GBPUSD. This combination of a hawkish bow and a weaker greenback provides significant fundamental tailwinds for the pair. Specific reports highlight GBPUSD turning positive near the 1.3450 zone, successfully bouncing off daily lows. Another key piece of information points to the stability of a current support level at 1.322, which has underpinned recent price rises, even amid what some describe as a broader bearish dominance. Additionally, the daily timeframe price action turned sideways on Friday, August 8th, after a strong bullish drive that reached the 1.34460 area, a point aligning with a significant Fibonacci level. Now, let's turn our attention to the charts themselves, starting with the one-day time frame to grasp the broader market structure. As you can see, GBPUSD has largely been in an uptrend since early 2024, demonstrating consistent higher highs and higher lows. This overall bullish momentum aligns perfectly with the current fundamental narrative of a stronger pound and a softening dollar. The market has experienced several pullbacks within this trend, offering opportunities for traders to enter on dips. Let's zoom in on a specific period to examine the reported support level at 1.322. Looking at the period from July 2024 through early August 2025, we can observe that the 1.322 level has indeed acted as a crucial support zone multiple times. Price found strong buying interest around this level in late July 2025, confirming its significance as a floor for the pair. This recent bounce from 1.322 further reinforces its role as a key level for long-term bullish positioning, validating the news reports. Shifting our focus to the very recent price action on the daily chart, particularly from late July into August 2025, we notice a significant bullish surge. The candle on August 7, 2025, was particularly strong, opening around 1.3357 and closing at 1.3451, representing a substantial gain. This strong move pushed the price directly into the 1.3446 to 1.3450 resistance zone, which the news mentioned as a key area where price action turned sideways. The last available daily candle for August 8th confirms this, showing a small-bodied candle with an open of 1.34508 and a close of 1.3449, indicating consolidation right at this resistance. This suggests that 1.3450 is currently acting as immediate overhead resistance, and a decisive break above this level would be a strong bullish signal. While the one-hour chart data available to us is slightly older, ending on July 24, 2025, it still provides valuable context for understanding intraday movements within that period. During this earlier time frame, after reaching a high of 1.3587 on July 23rd, the pair entered a period of consolidation followed by a slight downtrend towards 1.3535 on July 24th. This demonstrates how the pair can exhibit significant intraday volatility and reversals, even within a broader upward trend, emphasizing the importance of looking at multiple time frames. Now, let's examine the 15-minute chart, which provides the most granular and recent insights into GBPUSD's price action, extending to August 8, 2025. This short-term view clearly shows the intraday behavior that led to the daily candle's formation on August 7th and 8th. We can see the rapid ascent during August 7th, validating the bullish drive mentioned in the news. Following this surge, the price entered a tight range on August 8th, characterized by small candles and reduced volatility as it tested the 1.3450 resistance. This immediate consolidation confirms that buyers are facing resistance at this psychological and technical barrier. A breakout above this level on the 15-minute time frame, supported by increased volume, would signal strong short-term bullish continuation. In summary, GBPUSD is currently in a compelling position, characterized by a strong long-term bullish trend and immediate-term indecision at a key resistance level. The fundamental factors, particularly the hawkish Bank of England and a weakening US dollar, provide solid reasons to be bullish on GBPUSD in the short to medium term. A clear break and sustained close above the 1.3450 resistance, ideally on strong volume, would reinforce the bullish case, potentially opening the path towards the 1.3550 to 1.3600 range seen in earlier data. However, traders should be cautious. A strong rejection from 1.3450 could lead to a short-term reversal, with the price potentially retreating towards the 1.3350 support level. The crucial 1.322 level remains a significant long-term support. A break below it would indicate a substantial shift in the bearish direction. For short-term trades, look for confirmation of breakouts or breakdowns from the current 1.34 to 1.3450 range on the lower timeframes. Volume analysis can provide additional confirmation. Increasing volume on a breakout suggests stronger conviction. Remember to always set appropriate stop-loss orders and consider your risk tolerance. The overall trend is your friend, but reversals at key resistance levels are always a possibility. To recap, the immediate price level to watch for GBPUSD is 1.3450. A sustained breakout above 1.3450 has a high likelihood, around 70%, given the strong fundamental tailwinds from the hawkish bow and weakening US dollar. Conditions that would reinforce this likelihood include further dovish signals from the Federal Reserve or stronger than expected economic data from the UK. Conversely, a rejection from 1.3450, leading to a move back towards 1.3350, has a moderate likelihood of around 30%, especially if the US dollar finds renewed strength. The long-term support at 1.322 is critical. Its stability is key for the continuation of the broader bullish trend. Upcoming events to look for include any further statements from the Bank of England or the Federal Reserve, as well as inflation data and employment figures from both economies. These macroeconomic releases can significantly impact currency movements and either strengthen or invalidate current technical patterns. Always combine your technical analysis with an understanding of the fundamental landscape. Thank you for watching Explain the Charts, and we wish you successful trading.